be able to admit after that. So. Good afternoon. Welcome to the 2021 FIFCO Family Services, Inc. Community Health Fair, Matters of Health and Brown, of Matters of Black and Brown. Let me do that one more time. Good afternoon. Welcome to the 2021 FIFCO Family Services, Inc. Community Health Fair, Matters of Health in Black and Brown. We're here today with Napoleon Andrews, who will be our presenter for this afternoon. His presentation entitled, Yes, You Can Become a Homeowner. But before we get started, I'd like to just do some housekeeping. A reminder that this presentation is being recorded and will be available to you tomorrow by visiting www.easthillstream.com/FIPCO. Also, we will be sending out an email thanking you for attending this presentation. And in that email, you will receive a survey. And we appreciate your input about how we can improve for the next event. So please fill out your survey. It has about 3 questions, and they're short and brief and to the point. Also, we are on Zoom, so if you started your video and you wish to get up or you have to do something, please stop video before doing that so as to not just to distract our presenter or any other participants. And with that being said, without any further ado, I'm going to turn it over to you, Mr. Andrews.
Thank you so much, Evelyn. I appreciate the introduction. Thank you guys for joining me. I'm really passionate about real estate, so I'm happy to have this opportunity to be able to talk to my community to help them understand how to find affordable ways of buying homes in today's market. And give me a second here, I'll share my screen. All right, so as Evelyn said, this presentation is to really encourage and to provide some resources and some things to let you know that home ownership is for you. Again, my name is Napoleon Andrews. I am a licensed real estate agent here in the state of Arizona. All right, some of the agenda topics for today. First, I'll kick off talking a little bit about my background, what drew me to real estate and why I do what I do. I also want to go into helping you understand some of the pre-work that's necessary for you to have a smooth transition throughout the real estate buying process. Then I'll talk a little bit about ways to make real estate affordable, breaking down mortgage rates, talking about other ways that you can find some ways to save money in the real estate buying process. And then I'll end on some of the good things, really to break down some of the Arizona programs, such as the down payment assistance programs and some other home buying programs that are available to Arizona residents. So a little bit about me. My name is Napoleon B. Andrews. I have been a real estate agent a little over a year now, a year and about 3 months. Prior to real estate, I climbed the corporate ladder for 13 years. It earned me an international leadership award, working with a big shipping company here in the United States, DHL. I love corporate America. Corporate America did really well for me. However, it kind of had me confined in a box in a sense of it didn't allow me to really work with people the way that I wanted to work with people. And it was actually one real estate transaction that afforded me the opportunity to walk away from a corporate paying, 6-figure paying job to really truly align with things that I'm more passionate about, which is helping my community understanding how to change the trajectory of their life through real estate ownership. What I believe is that owning a home is a keystone of wealth, both for financial affluence as well as mental, emotional security. And that's a quote from Susan Allman. All right, so when it comes to understanding what you can afford, this is, in my opinion, the most important step that one should take, even before you honestly talk to a lender or even talk to a real estate agent. Though my practices as an agent, I like to help from the ground up. I like to start in the dirt with you. I think this is an important step to start to understanding how much house you can afford. One, because it will allow you to enter the market knowing exactly what to expect, knowing exactly what your financial capabilities are. And it really helps you fine tune into understanding what you're looking for, which will make the home buying process very, very seamless for you. And there's always 4 questions that I recommend that you start out asking yourself. 1, what is your gross income? How much money do you make? And that's pre-tax income. 2, what do you spend each month? So how much money comes in, how much money goes out each month. 3 is, do you have any credit card debt? And that I use credit card debt, but really credit card debt, student loan debt, medical bills, any type of debt that you're carrying, it's a good idea to get a firm understanding of your financial situation so that you're able to matriculate through the process very, very smoothly. And the last question is, how much money do you have in savings? So when it comes down to understanding how much money you can afford or how much house you can afford, lenders recommend that you look at it from the standpoint of spending no more than 28% of your monthly gross income. And that's pre-tax dollars. Having a firm understanding of your finances, gathering supporting documentation and answering the questions I just asked is pretty much the process that you're going to go through when you sit down with a lender, when you're looking at how or what the next step of buying a home is. Beyond understanding what you can afford, credit is the next stop that the lender will take you into to give you a grasp of, okay, how much house you can afford, but not only that, to really give you an understanding of given what type of loans that are available for you. Credit is pretty much the key indicator that will give you access to, for example, conventional loans, which are loans that are a little bit cheaper to carry, or FHA loans, which are loans that are a little bit more expensive to carry. Sorry, my clicker isn't working that well here. All right, so what is the difference between a credit score and a credit report? So many people use the term credit score and credit report interchangeably. And it really is a bit of a difference when you think of the two. I like to wrap my mind around the fact that the credit report is like the report card that you would get in school on a quarterly basis or a quarterly, monthly, semester basis. Whereas the credit score is actually the numerical value that you receive on the actual report card. So you can think of it as I received a 96A in my language art class, or I received a 70% in my math class. The 96A is going to give you the magna cum laude, which is the conventional loans, which are cheaper to carry. And the 70%, though it's passing, it gives you the more expensive loans or the thank you laude. And that will really help with understanding the differences of having a affordable loan versus one that carries a little bit more versus one that carries a little bit more money to carry. So your credit report is a record of money you've borrowed, your history of paying it back, and how much open credit is available to you. Lenders heavily depend on this information when they're looking and assessing your credit worthiness. From a credit report standpoint, it is a record of money that you borrow, your history that you paid it back, and it also keeps a track of any open and available credit that you have. As I stated, lenders heavily lean on this information and when they're assessing your credit worthiness, and it is likely that you will have to repay, or actually when they're assessing your credit worthiness and the likelihood that you're going to repay on that debt. So things to consider when you're looking at the credit report is The credit report is a list of debt and the history that you've paid on them. So your credit card debt, your loans from your cars, your student loans, and any bills that may have gone to collections. The bills that goes into collections do have a negative impact to your credit. So it's really good to practice good credit behavior, such as paying your bills on time. But also on the credit report, you can see things such as your public record information, if there are any tax liens or any bankruptcies that you may have, as well as any inquiries that you have on your credit. So when you're going out purchasing a car or you're purchasing a house, all of those inquiries on your credit carries weight on your credit report. The important thing to understand about a credit report, much like your report card, is that if you are in a position to where your credit isn't that well, you do have the ability to build it up. You can work to pay things off quicker. There's things that you can do, such as there's certain kind of credit card that you can get that you can pay on towards that will help you. One second. There are certain type of credit cards that you get to help build your credit, but the important thing to understand that is you can improve your credit. And it's important that you take a look at your credit report and your scores very often. You have the ability to get a free annual credit report once a year from all 3 major credit bureaus. That's Equifax, TransUnion, and Experian. I put that information on this slide. You can go take a look at it. You can go to www.annualcreditreport.com or call 877-322-8228. So we talked about the credit report. We looked at the credit report as being a historical ledger that keeps track of patterns of how you pay your bills. The credit score, on the other hand, as I stated, is a numerical value. Your payment history and your ability to repay your debt on time, whether you're paying it late, it will lower your credit score. You pay it on time, it will help to build your credit score. The amount of total debt that you carry, including your credit cards, your student loans, your car notes, all of those carry weight on your credit score. How long you've used the credit, how you manage your credit. Lenders are looking for patterns of good behavior. As I stated, paying things on time definitely helps you to be able to have access to the loans that are cheaper, which makes home buying more affordable for you. So we talked a little bit about understanding how much home you can afford. We talked about money going in and out, how much money you have saved. We talked about the credit, which is a very heavy piece with lenders, with understanding on how to get access to loans that are more affordable. Now we want to look at the rates of mortgage. So now let's approach this as if we're buying a home. When you go through the process that I've spoken to before, you get what's called a pre-qualification letter. The pre-qualification letter is like a blank check with an X amount of dollars that you're able to spend in the market. That blank check gives me the opportunity to write offers on your behalf once we actually go and shop for homes. The blank check also, so the blank check, the blank check is what we need in order to write offers in on a home. When you're stepping into the mortgage rates and affordability, today's mortgage rates remain low and is a good news for you in the buying market. Right now in the state of Arizona, the housing market has inflated. We have very, very low inventory. The last I checked, we had about 6,000 homes on the market, which means that there are not enough homes for people to buy. And if you understand the law of economics, when the supply is low and the demand is high, price is what is going to be inflated to control the market. So right now, what the government is doing to kind of offset some of the pain that buyers are experiencing in the market is that the interest rate that we have right now is at record low rates. And in the long run, it actually makes the affordability piece of a home pretty comparable to what it was before we hit this inflated space that we're in right now in the seller's market. So right now, today's rates are around about 2.8%. And I built a little graph on this slide to give you an indicator on just how mortgage rates play in the cost of your mortgage. So in a 30-year fixed mortgage, approximately payments on in a 30-year $200,000 fixed mortgage. 30-year fixed mortgage rates are approximately, 30-year fixed mortgage rates, approximately payments on a $200,000 mortgage is somewhere around, or gotta forgive me, it's difficult talking on here and I can't see myself. So let me start this over again. So mortgage rates and affordability. Today's mortgage rates remain low, and it's good news for you as a buyer in this market. This is what the government is doing to offset the inflation that we're experiencing right now in the seller's market. Last I checked, the mortgage rates in today's market is around about 2.8%. But I wanted to really give you an idea of what it would look like if mortgage rates were a little higher. So I ran a little scenario where, say for instance, we were putting in an offer on a $200,000 house and we were using a 30-year fixed mortgage. If we had a mortgage rate of 3.5%, you can expect your principal payment to be around about $898. This does not include insurance. This does not include taxes. At 4%, it's $954. And at 5%, you can expect to pay around about $1,073. So this slide is important to understand because mortgage rates are directly tied to your credit worthiness. The better your credit score is, the better chances you are of receiving the rate of the 2.81% that I have on this slide. When you think about from the standpoint of when I explain the credit report, like being in school, you have the magna cum laude, the 96%, the higher credit scores give you that access to the 2.81% interest rates. Whereas when you're on the lower end of the spectrum, the entry mortgage, the entry credit score that you need to have in order to be qualified for a loan is 640. The 640 credit score puts you in the seat of having the higher interest rates, which makes the home buying process more expensive to you. So once we get into the pre-qualification letter, we write up an offer, we submit the offer is accepted. The next step that the home buyer will have to make is depositing earnest deposit. The earnest deposit is deposited into what's called an escrow account. And this is another place where many of my buyers are a little bit confused because their escrow account is actually used for two different purposes. On the home buying side, you have an escrow account that holds the earnest money. The earnest money typically is around about 1 to 2% of the purchase price of the home. You put that money into the escrow account, it shows the sellers that you are a serious buyer and you really want to purchase this home. On the opposite side of the escrow account, once you became a homeowner, there's another escrow account that's used. This escrow account is again, it's the savings account that's savings account that is used to hold money on your behalf. As a homeowner, the escrow account holds the property taxes, the insurance premiums, and the homeowner's insurance, as well as the PMI. So in both cases, the actual account is the same thing, is the same. It is an individual account that's independent from you, the homeowner, and everyone involved in the real estate transaction. It's used to house money that's held on your behalf, whether it is the good faith payment or the earnest deposit when we're purchasing the house, or after you already own the house as a homeowner. It is an account that holds your property taxes, your insurance premiums, as well as your homeowner's insurance. So now we've gotten to the process of we've submitted an offer, we have the offer accepted, we deposited our earnest deposits into the escrow account. The next big ticket item that you as the homeowner will have to pay is your down payment. So as you start your home buying journey, let's take a moment to unpack all of the costs associated with the down payment and closing costs. The more prepared that you are for closing and other costs, the smoother the home buying journey will be. So depending on the situation that you're in, whether you're dealing with an FHA loan or a VA loan or a conventional loan, the down payment can be anywhere ranging from 3% to 20% of the home purchase. With regards to what type of loan you have, down payment, typically the borrowers can put down, like I said, between 3 and 5% of the home value in your down payment. Buyers put down between 3 and 20%. Okay, so when you look at the home buying process, you have, like I said, a conventional loan. The conventional loan is by far the best loan that one can receive in the home buying market. The reason being that the conventional loan, how if you put down 20%, you pay no mortgage insurance, which is called your PMI, your private mortgage insurance. If you put down anything less than 20%, you will pay a mortgage insurance, your PMI, but once you pay up to 20% of down, once you pay the down to 20%, the PMI completely goes away and you will only be responsible for the principal, your interest, your taxes, and your homeowner's insurance. Whereas an FHA loan, like I said, the FHA loan is a little bit more expensive to carry because the FHA loan actually has what's called a MIP, which is a mortgage insurance premium, and that actually lives with the life of the loan. In order to get rid of the mortgage insurance premium or the MIP, you would have to refinance to receive a conventional loan. So we talked about affordability. My goal is really to highlight what affordability looks like in our market. The FHA loan may give you access to own a home, and owning a home is very important. FHA loans, I highly recommend to use those loans if that's what it takes in order to achieve the loan, because owning a home gives you wealth that you can pass down through generations, which really helps to change the trajectory of anyone's life. So after we talk through, or I should say, once you decide landing on FHA versus your conventional loan, all of that depends on your credit. The next thing is, how do I come up with some of these funds to pay some of this money? So what Arizona has, I should say, most buyers, they go to their personal savings, they go to finance down payments. There are many other options. You can get gifts from family members, loans from family members. You can go into your 401k to pull out money to pay for your down payment. But if you don't have any of those options available to you, the state of Arizona actually do have great programs that are available to help with the down payment of your home, whether it's through down payment assistance programs, as well as other governmental programs that will alleviate completely, in most cases, the down payment on your home. Outside of your down payment, you have what's called your closing costs. These are your settlement fees. These costs are incurred as part of the home buying process. These are fees charged by people representing your purchase. That can be your lender, your real estate agent, someone like me, third party involved, such as your title companies. And it's safe to say that when you want to get a range for how much you can expect to pay in your closing costs, the good range to think is between 2 and 5% of your purchase costs. As I stated, the government recording fees are things that are covered in your closing costs. You have your appraisal fees. When your mortgage broker pull your credit, there's a fee that's associated with that. That's in your closing costs, your lender origination fees, your title services, your tax service fees, as well as the fees for underwriting the loan itself. All right, so I talked a little bit about, if you're unable to come up with the funds to pay for your down payment, some different programs that are available. Arizona's best down payment program is a down payment assistance program. The Arizona Home Plus mortgage program has been updated to offer a great variety of opportunities to Arizona homeowners and buyers, who needs a down payment assistance. These expanded options include different down payment amounts, higher maximum limit amounts, and income limit different from loan programs and what you qualify for. The first one I would like to discuss is called the Home Plus. It is a down payment assistance, and it's a forgivable second mortgage that can assist you up to 5% of your down payment. We talked about credit score a little bit. The minimum credit score to qualify for this program is 640. The maximum debt to income is 50%. The maximum income that you can make as a household is a little bit under $10,000. And one important element to think of if you're looking to use Home Plus as a down payment assistance is the primary resident must occupy the property within 60 days of closing. The borrower can own other properties at the time of closing. So these are the criteria that you must meet in order to qualify for this down payment assistance program. It is a forgivable second mortgage, which means that each year that you live actually is over the course of 3 years. The first 3 years of you living in that home, it will take away one 1 month from the 72 months in that process. So every month you live in that home, you earn 1 over, I think it's 36% of that actual benefit. Another option that you have, this one is called a Home in 5. It is another forgivable second mortgage. This offers assistance up to 6%. The credit requirements, the debt to income requirements are the same. However, the maximum income does decrease a bit here, where it is only a $105,000 as a household income. This particular loan is a little bit different from the other option, whereas the borrower has 60 days to move into the home and they could have ownership in other properties. This particular option does not allow ownership in other interests in other properties. This must be the principal residence of the buyer at the time prior to the loan closing. The borrower and the spouse must occupy the property as their primary residence. So outside of those two down payment assistance programs, there are some other programs that are available that actually give you additional resources, additional monies, and make the home buying process more affordable. One of those programs is called NACA. NACA is the best purchase program in America, according to its website. NACA provides both comprehensive housing counseling, access to incredible mortgages. NACA has over $15 billion committed from some of the country's largest lenders, with everyone receiving 4 extraordinary terms. And this is the big kicker with NACA, and why I support it 100%, is that it's no down payment, no PMI, no points, and points are the interest rates. If you're in a situation to where you want to maybe achieve a cheaper interest rate and you want to pay additional monies, you can pay money to pay down your interest rate. It's pretty much putting money in the front end of your loan so that you can have a cheaper rate over the course of your loan. But NACA removes the need to have to pay down points or even pay fees. And there's no closing costs. And this is the biggest of all. The interest rates for NACA loans are below actual federal guidelines for the federal interest rates. And if I recall, right now, NACA interest rates are around about 2.15%. So that's a pretty drastic change from what the national rate is right now, which is around about 2.81%. NACA's home ownership path, it is a process you have to go through. You have to take a class. The first step is to attend the NACA Home Buying Virtual Workshop. It is free. The website is in the slides so that you can take a look at it. Once you complete that workshop, you are going to prepare your web file for your first appointment with a NACA counselor. This counselor is going to sit down to talk with you about those 4 or 5 questions that I asked you about. You know, how much money is coming in, how much money is going out, how much money you have in debt, how much money do you have saved. Then you're going to fill, if you fulfill the requirements for the mortgage, then you'll move along through that process. You'll work with that counselor to improve your financial management. They'll work you through different documents for the home ownership program to determine your affordable mortgage payments, and you'll become NACA qualified. Once you attend a NACA purchase workshop and find a home, you've pretty much went throughout the entire process. You're going to submit your application to the bank. You'll receive your lender approved, and you'll close on your home. It is a pretty streamlined process that's handled all within the NACA program. And I think it's one that you should take a look at. It's a very, very good program. The other program that is offered here in Phoenix, and this is one that I've personally worked with through the Greater Phoenix Urban League. This group works on the behalf of those in need and has literally touched thousands of lives in the city of Phoenix and surrounding areas. The Greater Phoenix Urban League is a health and human services organization with the mission to equip the disadvantaged with the tools to achieve economic and social equality through programs in children development, education, job readiness, housing, and small business support. I also have their website so that you can take a look at their information as well. Under the Greater Phoenix Urban League is a program called the Neighborhood Stabilization Program, NSP. I actually just had a client we're closing next week through this NSP program. She was awarded $15,000 that went towards down payment, closing costs, and even eventually the principal cost of the home. A home that was on the market below value, at $280,000, actually $230,000. She was able to get it for $215,000. But the home buying eligibility criteria through this program, you contribute 50% towards your down payment. There is a bit of a difference between the NSP program versus the NACA program. The NSP program do require that you have some money to put towards the program, towards the down payment, to ensure that you have skin in the game. You cannot be on the title of any other residence in order to qualify for this program. You must be a permanent legal US resident. You must occupy the home as a primary resident and earn within the program minimum. And I have the website here. I kind of did a high level glaze over of these programs because there are some more detailed pieces that you will need to go through, but there are home buying programs that you sign up with a counselor to really take you through the granular pieces of the program. But NSP's home ownership program path, first, you're gonna contact a lender familiar with the program. You're gonna apply for a home loan and obtain the pre-qualification letter. Whereas NACA, you actually went through the housing counseling that set all of this up for you. NSP actually have you do a lot of that lifting yourself, along with your real estate agent or your mortgage broker to help you qualify for the loan independently. Once you are qualified for the loan, however, you can schedule a one-on-one credit assessment by contacting HUD certified counseling agent. You contact the HUD agent to schedule an 8-hour buyer's class. This class is a fee of $100 to attend. Then they will send a pre-qualification package to the NSP administrator. So once you are pre-qualified with your lender, we send that information over to the NSP administrator, who then review the file for eligibility. Once eligibility is achieved, you'll receive an eligibility letter, which makes you eligible for the program. And then you will work with a real estate professional to find a qualifying property and enter into a purchase agreement. So to verify the real estate professional forward the signed purchase contract to the property listing and the NSP loan officer. The NSP loan officer performs the city due diligence, which means that they go through all of the information, make sure the house is up to standard, up to code, make sure, again, that all of the documents are legitimate. So pretty much you're going through an underwriting process all over again to ensure that you are credit worthy, that you are eligible for the grant. And as I stated before, the grant is in the amount of $15,000. It can go towards your down payment, your closing costs, and even pay down on the principal of your loan. Once all the eligibility is completed, you purchase your home, you go through your pre-closing, which we just completed this last Friday. You get all your loan docs, and then you are now the brand new owner of a home. That pretty much wraps up, guys, what I had to talk about today. Here's some ways you can reach out to me if you want to connect to learn more about those programs. I have my Facebook profile, my LinkedIn, as well as my Instagram information, as well as my e-business card. Thank you guys so much. I hope to hear from you soon, and I will pause here to see if there are any questions that are out and available for me.
Yes, we have one question so far, and it is, if my credit is at least 640, how long does the entire home buying process take typically?
That's a very good question. Thanks for asking. The home buying process it's phases of it. From the standpoint of you being able to qualify for a loan with a 640 credit score, it's just a matter of sitting down with a lender, filling out a loan application, and submitting over a few docs to receive what's called that pre-qualification letter. So it could take anywhere from 4 hours to 4 days. It completely is kind of up to you and the lender that you're working with. Now, beyond that, it becomes a little bit more interesting. As I stated before, we're in a very, very tight market right now. There are less than 6,000 homes available on the market, which means that in most cases, you're going to put multiple offers in, you're going to encounter multiple bidding wars. So the home buying process now can take anywhere from 30 days up to 3 or 4 months at this point.
Are there any further questions? Do we have any further questions from the audience? So I'm going to invite the audience at this time to give Napoleon Andrews a huge, and to do this, I'm actually going to unmute you so you can give him a hand clap, or you can use the reaction button at the bottom of your screen. There we go. Okay, so we got hand claps.
Thank you, guys.
All right. Thank you so much, Napoleon. Before we end, I do have a reminder again. This is just some homework for the participants, and I'm going to share the screen. So we're reminding everyone again that if you want to check out this presentation tomorrow, you can visit the www.easthillstream.com/FIPCO, and you will click on Napoleon Andrews speaker portfolio, and that link will take you straight to this video presentation. Also, there will be information in the room of hope and help. We invite you to visit that as well. And hopefully by tomorrow, Napoleon, all of your things will be uploaded to the room of hope and help, and they can also get them out of there. Napoleon put some slides and some information in the chat. So if you would like to download it today, you can do that as well. As I mentioned earlier, you will receive an email tonight from FIVCO thanking you for attending this presentation. And we asked, there will be a short and very brief survey included in that email. We ask that you fill that out because FIVCO truly, truly appreciates your input on telling them how they can improve for next year. And would you like to say anything else, Napoleon? Any further last closing remarks?
I just appreciate the opportunity, and I appreciate the time to share about the real estate market, and look forward to hearing more from you guys.
Thank you so much. And everyone, enjoy your Saturday and have a great evening and the rest of your weekend. Take care.
You as well.